agenda is we will cover what is SAP FICO. We do not normally say SAP in when we are working in SAP. We always say SAP. What is SAP FI? SAP FI, what are the submodules? What is SAP CO? What are CO's submodules? And what is the integration points between FI and CO? So what is SAP FICO? SAP FICO, FI stands for financial accounting and CO for controlling. The SAP FICO is a module that used for financial reporting both externally and internally. The objective is to record all financial transactions that are posted by an entity and produce financial statements that are accurate at the end of the trading period. So FI is external requirements, CO is internal requirements. So FI is your statutory books of accounts. That is, any business organization is required to keep by law. It's a legal statutory requirement. CO, on the other hand, is for internal requirements, so the management accounting. So what is FI? From FI, you will get your balance sheet, income statement, your cash flow, balance sheet, income statement, which are required by various statutory bodies like income tax authorities, the sales tax authorities, the stock exchange, which you have to put it into. CO, on the other hand, is internal requirements, which is management accounting. It is not bound by any statutory legal obligations. So a short example of a difference between FI and CO. In FI, when you're calculating depreciation, you'll calculate it according to the Companies Act, if you're an Indian company. So that will tell you just how much depreciation you are allowed to charge against a group of assets. CO, on the other hand, the same depreciation you can charge at different rates. Because if the Income Tax Act says you depreciate something at 10%, but you say that 10% is too little, this asset will be redundant in 5 years, you will, for management accounting purpose, charge at the base of 20%. So FI is statutory, CO is internal management requirements. Now, in the FI module, we record and maintain financial transactions of an organization in a real time on a daily basis and generate financial statements. Real time means the moment you enter something, it is reflected in the system. Okay, the FI module records and maintains financial transactions of an organization real time on a daily basis and generates financial statements, like your balance sheet, profit and loss, loan, your external reporting. So, as in the, you all have many of you all are still working or working in right now in accounts departments or finance department. So, can anyone give me from how your accounts department is normally broken up in terms of work?
It's like by record to report, maybe accounts receivable, payable.
Yes, perfect.
Yeah.
So your accounts in a normal accounts department, you'll have someone handling accounts payable, you'll have someone handling accounts receivable, which are your customer accounts, someone handling asset accounting, someone handling bank accounting, someone handling general ledger. So the FI submodules are broken up in the same way. You have vendor accounts, which are reflected in accounts payable, customer accounts, which are in accounts receivable. You have asset accounting, and you have bank accounting. These are the sub-ledgers, and these sub-ledgers all flow into the general ledger. So these are the main sub-modules of FI. There are, by the way, other sub-modules which we are not covering in the course, like travel management for one, real estate management another. So the key modules of SAP's financial accounting would be the general ledger, accounts payable, accounts receivable, bank accounting, asset accounting, and travel management. Now, that being said, we have covered what basically in a very generalized way, what is SAP FI. Now, looking at SAP CO. SAP CO is one of the important modules of the SAP system as it provides the operational information for management for better decision-making process. So it takes care of all requirements for reporting. As I said before, controlling is management accounting. So from your work experience, from your studies in university studies, you would know that there's two. There's financial accounting and managerial accounting. Financial accounting limited by statutory laws and requirements, whereas CO is more flexible. Management accounting is more flexible and can be done on the basis of what a company actually requires or the managers of a company need, the kind of information they need to make decisions. So the key modules of CO are cost center accounting, product costing, profit center, and profitability analysis. Actually, profit center and profitability analysis are two separate submodules, not taken as one. So that briefly covers what is SAP FICO. We've gone over what is the SAP FICO module. Now we are going to introduce you to what is known as SAP R3. The agenda of the next session is an introduction to an ERP, advantage of SAP over other ERP packages, what is SAP R3 FICO, and SAP R3 architecture. ERP stands for Enterprise Resource Planning. It is a software that is built for organizations belonging to different industrial sectors regardless of their size and strength. So ERP encompasses many areas of a business. It will encompass supply chain management, financial statements, manufacturing, big data analytics, business intelligence, project management, manufacturing, customer relationship, service management, sales and marketing, human resources, asset management. It's a multifunctional software. An important thing to remember about an ERP system is business process integration. Business process integration plays an important role in overcoming and integrating challenges that allows an organization to connect systems internally and externally. So, what does a business process integration allow? One, automation of business process. Simple example of automating a business process is if someone in, say, the sales and distribution module enters an invoice, simultaneously in material management, the stock will be reduced. Simultaneously, as they have finished the entry, the sales in the general ledger will be updated. Simultaneously, the debtors account will be there will be a liability reflecting over there or payment to be collected. It happens simultaneously in all areas. Integration of systems and services, secure sharing of data across numerous applications, automation of management, operation, and supporting process. So this is a generic business process which normally you will see in a it keeps changing according to the business process of an organization, but in general, this is what a business process looks like. You have material planning, and that material planning is attached to your inventory. Your material planning is attached to your procurement. Your procurement is attached to your production, and your production and therefore into fulfillment where you are selling. The inventory will be linked to your fulfillment, warehouse management, and inventory. They in turn will be in for production. All this will flow into financial accounting and management accounting. Then at the side of all this, you will have human capital management, because people in procurement will be under HR, so will people under sales and distribution. So this is a very basically how the entire business process from various functions in an organization are linked together. Some are not linked directly, some links are derived by the system itself, by the process itself. So there are direct links and indirect links which are derived. So what is the benefits of a business process integration? A good integration of a business process will simplify operations, it will lower your cost, it will improve quality, it will enhance productivity, it will standardize workflow, it will help deliver smart services. There's a very good service integration. These are some of the small benefits that come from a proper business process integration. So, an ERP. What does an ERP? What are the functions of ERP? How does it support an organization? An ERP supports the integrated business process inside the organization. We use that example of someone creating an invoice. It improves capital planning and helps in executing organizational plans and strategies. Helps speed up decision-making processes over analysis of accurate data. Helps extend the business network to wider domains, expanding the product and services to reach more customers, suppliers, and partners. Identifies operational risks to improve governance. Gives long-term profit by providing means to increase the customer base. Now, this is again very generic. Most ERPs do this and serve this functionalities. And it is mostly theory. In most cases, this part, many of these points will not actually grip your mind because you haven't in your job.
Sir, what is governance?
Sorry?
What is governance?
Governance. All of you all have come out of your finance. Is anyone here remembers what improved governance in just the term governance from your university studies? Anyone? You all would have covered this in your degree courses or master courses. Governance of a business is basically how well you run your business processes. There are certain helps you get to make sure that you adopt the best practices. Like anyone has heard of Sarbanes-Oxley? Anyone? So anyone working in a finance department would know what Sarbanes-Oxley Act is. Is there anyone capable of giving us a little? The governance is basically comes down to how well you run your company, how well your business processes run. What are the checks and balances that you have put in place? Would you allow a person who is the segregation of duties is one part of best practice in company governance? Is that clear?
It's like run the business with the legal rights and everything.
It is not only legal. There are certain parts of the business you have to run according to statutory legal requirements. That is correct?
Yeah.
Then you have certain parts of the business which is run on basis of best practices in the industry. What is the best practice? A best practice is basically the best way of doing a certain process. So when we, one of the best practices, it might not be a legal requirement, but it is a best practice requirement that says they should have a proper segregation of duties. That someone who is responsible for entering something in the system, a transaction system, should not also be the one to approve that particular transaction. So that it takes care of any misappropriations, right? If I am as a clerk entering an invoice in the system and somebody else has to approve it, that is the double check on what I'm doing. That is the best practice. So it is not a legal requirement. It is both legal requirement as well as best practice comes into the improved governance.
So, like, other example could be the audit requirements. Like when we research the audit requirements, we should.
Audit requirements are legal requirements, and it is not really. They also factor in as part of governance. But when we identify operations and improve governance, we are not going to improve the audit over here. The audit is an outside company doing it. Like I said, operational risk, you always have a risk of misappropriation, right? So what is a good way to stop misappropriation? You have put in place certain levels of approvals, certain checks and balances. So one example of governance would be at this level, accounts clerk or an accountant can only enter invoices up to 10,000. From this level to this level, accountant can enter invoices from this level to this level. If under 10,000, a junior person can, junior manager can approve. Anything over 50,000, a senior manager has to approve. Anything over 100,000, VP has to approve. So this is an example of governance. The approval process a company puts in place is an example of governance.
And like, could this be another thing? Like, all the process should have a standard documentation. Is the like
that also a process put in place will have every company will go with a standardization of a business process, so everyone has to follow it. So all that comes under the governance. How you run your business is basically your governance. All the steps you have put in place, or everything you have, your paperwork, approval system.
Hey, you know, ZaranTech now offers SAP corporate training. That's right. Train your workforce in SAP with our comprehensive program. We offer customized courses, certified trainers, and hands-on labs for both individuals and businesses. Our standout features? Bespoke training, fully configured servers for practice, in-house materials, and a dedicated LMS. Plus, get session recordings and 24/7 support. From functional to technical modules, we have got it all. Choose ZaranTech for SAP training and watch your team excel. Learn, upskill, succeed with ZaranTech.
Your security badges which you use to enter and leave the premises, these are all part of governance. These are all how a company, a business runs itself, and therefore it is part of their governance. Now, when we look at an ERP, we have an ERP is normally broken into either functional areas or in terms of business process. So what we are looking here are the functional modules of an ERP system. So the functional modules will be finance, sales, purchasing, which is material management, HRMS, which is your HR, customer relations management, inventory management, warehouse management, e-commerce. These are all, you could have more functional modules than this. But these are the core functional modules you have in an ERP system. But this is generic and it applies to just about every other ERP system. So ERP brings a lot of benefits. It's time management, automation, visibility of reporting, security, integration, collaboration, information, forecast, flexibility, innovation, transformation, manufacturing industry, mobility, efficiency. These are all the benefits that an ERP system brings. So what are the benefits SAP brings over other ERP packages? Can anyone, apart from SAP, name any other ERP, popular ERP right now?
Oracle.
Oracle, yes. Oracle is the next. There's Microsoft. There's Dynamics. So there are a number of other competitors to SAP. So what makes SAP a choice? For one, SAP is suitable for any business size. It's a global solution. So nowadays, since companies are spread out all over the world, SAP, with the way its solution is set up, you can bring uniformity, whether your company is based in America, Europe, India, or the Far East, like Japan. You can have, it's a global solution. It does not provide any redundant functionality. That means there's no duplication of work which is going to happen because someone has to do something twice. SAP provides shorter implementation time and fastest financial payback. It's often open to dispute, but SAP says our implementations are shorter. Another thing is constant development in SAP. SAP is always improving on itself. When I started in SAP 20 years ago, there were on version 3 companies were. In the next 20 years which I've worked, SAP brought in 4.7. Then it enhanced it to ECC5, then ECC6. Then it went to EHP7. And when I finally retired at the end of 20 years, SAP has brought out SAP S4HANA. So SAP has been on a long road to bettering itself and giving more and more advantages to its customers. So what we saw before were the generic sub-modules of an ERP system. Now we are taking a look at some of the modules which is in SAP, the functional modules. So you have SAP PM, which is plant maintenance, human resource management, which is commonly referred to as SAP HRM. You have material management, MM, financial supply chain management. You have production planning, PP. You have sales and distribution, SD. SD, PP, MM are the departments a finance person will most than likely be interacting with. There's a heavy interaction between finance and these 4 departments. You have finance, accounting and controlling. You have project system, quality management, plant maintenance. These are some of the sub-modules which are part of the SAP offering. Now, we have said this before, an introduction to SAP FICO. The SAP FI module records, maintains financial transactions of an organization. We have gone through this before. So can someone break up FICO for me in a very short delivery?
So FI is for the statutory requirements that the balance sheet, profit and loss, cash flow accounts are prepared, and the CO is for the management reports, that how the management wants to look at the report. So based on that, CO has been implemented.
Okay, all right, very good. So we have covered this in a little bit, introduction to FICO. Let's look at the basic now that we know what FI is, let's look at what basically we do in the financial accounting module. What are the activities? SAP works very much on, you'll create an organization structure. Based on this organization structure, you will create master records or master data. Using the master data, you will create transactional data. Using the transactional data, you will have will flow into an information system. So you create a organization structure first. Based on the organization structure, you'll create master data. What is master data? It will be GL account, vendor account, a customer account. These are the master data. Based on customer master data, you will create invoices, payment received. Based on vendor master record, you will create, you affect purchases and you will make payments. Based on all the invoices you raised, you can create a report for, say, outstanding statement, which you have to collect, or based on the transaction of what you have entered, you can do your funds received, you can do your bank reconciliation and cash flow fast. So that is how SAP flows. It is very uniform. You have your organization structure, you have your master record, you have your transactional data, and then you have your reports. No matter what module or which area on SAP you're in, this will be a constant. So when you're looking at SAP, you always need to understand what first is the organization structure. So you have the creation of an organization structure first. What would be the areas of an organization structure would be a company, or what we call a company code, a controlling area, creation of a plant. These are organization structures. Then you have financial accounting global settings. What are global settings? Global settings would be the fiscal year of a company. That would be one. What are the posting periods? That posting period refers to the month. So these are what currencies, time zones. These are all accounting global settings. Then you have general ledger accounting. You have accounts payable, accounts receivable. You have asset accounting. You have integration with SD and MM, that is sales and distribution and material management. These are the basic activities which we will be covering. So, general ledger, accounts payable, accounts receivable, bank, asset. We have seen this slide before. Travel management. These are the sub-modules of FI. Now, looking at CO. This is your management accounting. CO is one of the most important modules of the SAP system from a management perspective. So, under CO, you have certain, like in FI, you had GL, you had accounts receivable, accounts payable. In SAP CO, we also have sub-modules, which is cost element accounting, cost center accounting, activity-based accounting, internal orders, product costing controlling, profit analysis, and profit center. I think from your studies and your university, you all would have heard of cost center accounting. You'll have heard of activity-based accounting, internal orders. Cost element would not have been part of your any studies because it's something fresh to SAP itself. SAP has devised this. So these are the modules, the sub-modules of. Now we are putting that aside. We are going into something new. We are talking about SAP R3 architecture. So R3 architecture, what does an R3 architecture mean? R3 basically is a 3-tier architecture. So you have a database layer, an application layer, and a presentation, what we call a presentation layer. So the user's PC is the presentation layer, the application servers and the database. So what does the presentation layer is, as a SAP consultant or as an SAP user, when you log into an SAP system and you're sitting in front of the system, you are in the presentation layer. The application layer is basically, if I enter a query, I want a report or outstanding report of these customers. What the application layer will do, it will create a query and it will query the database with the information you require. So you have an architecture, basically three levels: a presentation layer, an application layer, and a database layer. So what is a presentation server? The presentation server contains systems capable of providing a graphical interface. That is, you will refer to it down the line in SAP as the SAP GUI. GUI, graphical user interface. Now that your GUI will be on your desktop or your laptop. Then you have an application server. These are specialized systems with multiple CPUs, vast amount of RAM, which basically query the database. The database server contains your specialized system with fast, large hard drives. So, presentation layer components are installed across many PCs. The application components are installed in one or more high-end servers. Database components served on high-end database servers. Now coming to you will have that is about the R3 architecture. Now you will hear client. When you'll get your SAP access, you will get a server or client. It will be 800, 300, 400. That is what you will be using. So in one server, you can have multiple clients. And under multiple clients, you can have multiple companies. So a client 00 and 001 can be used as a basis or a source for a new client setup. In SAP is one thing made it very easy is it has given certain standard features. And if you want to create something, you have an option of copying that existing base, and you can either rename it or just rename it and use it as is, or you can copy it, modify it, and change it to your own specifications. That is one of the big advantages SAP gives in when we are customizing or doing anything, or even when we are creating master data. If I want to create a vendor master and I find that it's more or less identical to some other vendor which I've already created, SAP will give me the option to copy that, use the old data as a template, and it will just copy the information, and I just have to change the information as per what the new requirement is. A very good feature of SAP. Now, running SAP on your system. We are not talking here about the SAP software. We are talking about the accessing SAP when the SAP system is stored somewhere else. So you need, if you are on Windows XP, you need a minimum of 1 GB RAM. 2 GB is recommended. Windows 7 is minimum of 2 GB. 4 GB would be the best. Mac with virtual Windows environment, minimum 2 to 4. You need at least 145 MB disk and 250 available for the SAP GUI and for the disk space for fully installed application. Now, this does not mean you have SAP on your laptop. SAP will be on some other server and you are going to be accessing it through these specs. But to access it, you need minimum of these specs. All right? Is that clear?
Yes.
Okay. So 145, 250, and you have 1 to 2 GB. More your RAM, the faster access you will have in SAP, because SAP can be quite heavy. So it will, if you have speed is slow, your RAM is less. Say you click on a button and it will take quite some time to open. It can be quite frustrating.